September 26th, 2023. Today we got a big leg one, pullback, leg two. It was actually exactly to the tick. You can see this is a tick above. But yeah, you can see that it's basically exactly a leg one, leg two measured move. And it happened because bulls tried to get a midday reversal, but they failed. You can see basically 32 flipped the market to always in long. So any bears who were short down here had to exit above 32. One of the helpful ways to think about always in is where the other side has to exit. So if you're short, you probably have to exit above 32 because there's too much risk of a bounce. So traders will exit above 32, but bulls were never quite able to get anything going. And you can see they started getting huge tails right here and right here. And, at this point, it had been about 10 bars and the bulls wanted to be higher. And you can see they basically ended up giving up on 46. And any bull who's still long on the close of 46 is going to exit below 46. And so the first couple of these bars was probably mostly due to bulls selling out of longs, and bears started initiating shorts, and they got big follow through. I will say this wasn't very likely. We're pretty oversold on the daily chart, in my opinion, and I think there's probably about a 70% chance that tomorrow we get a close above the open of the day. So I think, very likely we're going to get a bull close tomorrow. I think the bulls who bought below this low, bought below yesterday's low, are going to make money. Meaning, I think that even though we sold off down here, I think we're going to get back to this low. Probably going to get back to this low. So I think they're around the same price, but I think we're probably going to get back to this low. Maybe not tomorrow, but within a couple days for sure. I think we're getting back to here, and we'll see where we go from there. Bar one, bull bar closing near its high, but it's not big enough to buy. I think if you're going to be buying after a big gap down, you want a bull bar that's somewhere up here, maybe closer to 10 points. It would show that bulls were really interested in buying and that this double bottom, it's a double bottom with two from yesterday, but it would basically show that bulls are really interested in buying. You get a strong double bottom and you can buy hoping for a swing up. But you can see it was a disappointing bar. It didn't close on its high. It had a big tail on the top of one. So something's not right with it. Two has tails on the top and the bottom, and so traders are even more disappointed to close at two. And then three has a big tail on the bottom and a tail on the top as well. So this is not strong bull price action. If bulls were, that strong, we would probably be rallying pretty quickly. And especially when you get a big gap down in a bull bar on the open, the pattern is sometimes you get a big gap down and a big bull bar closing near its high, and you can buy, and it'll just be the low of the day. But when that happens, generally bars, the first couple bars of the day are going to be big, strong bull closes. You're not just going to get a disappointing follow through bar, another disappointing follow through bar, or at least it's very rare that that happens. Usually, if this is going to go, it'll just start to go. But all these tails are disappointing, and they're warning signs to bulls that, traders really, that bulls are not as strong as, traders want them to be. Follow through so bears on four, basically bulls selling out of their longs, disappointed in three, and that causes a big bear bar on four. Some traders sell below four, hoping for break even, hoping for follow through, which they get on bar five. Some traders bought below one during five, assuming that we're going to bounce up enough for them to make money. Other traders bought below three, assuming we're going to bounce and allow them to make money. And you can see traders who bought below one and three were trapped all day and never let out a break even, hence the bear trend day. So traders who bought below one, probably disappointed in five, and were trying to get out around break even during 6 and 7, but you can see they were never able to. There were sellers immediately above 6 when we got there, and we got an outside down second leg down. We got a pullback on 8 and then a surprise follow through on 9 and 10. This is really climactic. I don't think it's going to look like this if we're going to get a bear trend day. I think if we're going to get a bear trend day, it's going to be, it'll probably start more like this. It'll be similar sized bars, but it'll look more like a channel, and it'll just kind of go all day. Generally, that's what small pullback trends do. If you look at how steep, 4 through 10 is, usually bear trend days do not start that way because it's too unsustainable. It's too fast and climactic, and bears aren't able to hold this all day. And that's one of the reasons why there was an attempt at a midday reversal in the middle of the day, but it obviously failed, like you can see during 46. 11, bull bar, but not closing very strong. You could argue a parabolic wedge, the gap, 2, 3. So 3 pushes down, and so some traders will buy above 11, but it's not all that good. You get follow through on 12. So I think it always flips to long above 12. I think bears have to exit above 12. So some bulls will take the buy since they know bears have to exit, but they also know that this channel is pretty tight. And so we're probably going to get another leg sideways to down before we go up. If we do go up. Bad follow through on 13 and a high one on 14. I think occasionally 14 is going to go and you're going to, maybe not just get strong consecutive bull bars closing near their highs, but you're going to get a more sideways to up move and it'll start basically a bull channel is what you're hoping for. You're hoping for essentially a sell climax and then a bull channel for the rest of the day if you're buying above 14, which can happen sometimes. So good follow through on 15, but a big disappointing failure on 16, which pretty much eradicates the argument for buying above 14. Additionally, bulls who bought above 12, so if you bought below 3 and you bought more above 12, you have an 80% chance of getting out of break even. And you can see that's right around the price that we failed at because those bulls who bought below, they were super disappointed in this and they were still disappointed, by the time they bought above 12. And so they just got out of break even. They also have a 60% chance of getting back to their original entry price at the 3 low, but you can see we never got there. So 16, again, probably, premise no longer valid for the bears, for the bulls. So a lot of traders exit below 16. So a reasonable swing short. You get follow through on 17, but it's not a big bear trend bar. So a little bit disappointing. Some bears scalp out, causing a bull bar on 18. Some traders would look at 18 and say, well, you have a bear trend line, and then you have a trend line break, and then a higher low major trend reversal. But I don't think that's a very good argument. To me, it just looks like a third push up, 11, 12, 14, 15, and then 18 is a third push up, making it more likely that we're going to see a failure here. And you can see we get a failure on 19. It's probably just buying the top of the trading range if you're buying up here. 20, a big bear bar closing near its low and follow through on 21, but we're probably at least getting back to the 19 low. You can see that's around the resistance area we got to on 39 and 41. Why are we getting back to the 19 low? For the same reason we probably should have gotten back to the 3 low or the 1 low. It's because there are bulls buying below there that were disappointed. Something to keep in mind, by the way, I think that tomorrow, you have this bear trend. You have a couple of bear channel lines, right? You have the bigger bear channel line here. You have a smaller one here that we broke. You could argue that we broke it, pulled back, and this is an attempt at a major trend reversal. But I think what's going to happen tomorrow is, I don't know what the gap's going to look like, I guess I would say. But if we gap down somewhere down here, I would be really ready to buy early in the day. I think that if we gap up, it's going to be somewhat neutral. So basically any gap down for me personally, especially around here, I would be super, super eager to buy if we get any sort of reversal up. And any sort of neutral gap, if we pull back, I would be super eager to buy in this area. Why? Because it's an area of agreement where the bulls have bought before and we're already oversold on the daily chart. Like I mentioned, we're pretty oversold. We're pretty oversold in here. And so I think if bulls get a chance to buy at a good price down here, when we're oversold, I think they're going to take it. And that could lead to a pretty strong bull trend. So I was on 22, bad follow through for the bears, but a couple straight bear bars, so enough for a second leg. And you can see 23, 24, we're able to race down. Some traders will sell down here, but anyone who's selling down here should be selling small, knowing that we're probably going to pull back. And anyone who sells probably has to exit above 25. It's not quite always in long above 25, but I think always in bears would exit because it's a reasonable enough chance that we're going to rally to the moving average even after these 5 strong bear closes. Why is there a reasonable chance we're going to rally to the moving average? Well, you could argue it's 1 push down, 2 pushes down, 3 pushes down, and it's also a wedge 1, 2, pullback during 22, and then 3 on 23 and 24. So it's somewhat of a nested wedge on 25, even though this is a pretty strong sell-off. So I would be concerned that we're probably going to bounce here. Follow through on 26 for the bulls, but it's not all that good. Bad follow through on 27, and you can see we're probably more likely going to be sideways here. Anyone who bought maybe the close of 26, disappointed 27, is getting out during 28. Inside bar on 29, but 50% chance the first breakup fails. It's probably not going that much lower. And then a reversal up during 30. If you sold during 29, I'd probably get out above 30. If you didn't get out above 30, a lot of those traders are just going to get out around break even during 32. And you can see that's what happened. Anyone who sold below 29 is disappointed in 30, tried to get out during 31, but it didn't quite let them. And then 32 let them out at break even. So they just took it and we get a bounce up on 32, closing near its high. I think 32 clearly flips the always into long. Bear short for any reason, there's no way around it if you're a bear there. You kind of have to get out. And I think, again, that's the important thing to remember with always in is when the other side really has to get out, that's when you should be, placing your trade in the opposite direction. So bears definitely have to get out above 32. So bulls will buy above 32. They get kind of bad follow through during 33, but this whole spike, this whole thing is pretty strong. And so we're probably going to go a little more sideways first, not to mention it's the first close around the moving average. So if you're buying above 32, it's a swing trade. And I think you know that you're probably going to test the 31 high. You're probably going to go a little more sideways first, but you're ultimately hoping that, probably within 5 to 10 bars, we're going to start to break out to the upside and start to rally. It didn't end up happening today, but usual or a reasonable amount of time. I would even say usually, I would say 60% of the time, you're going to start to rally here instead of getting a surprise breakout down. Buyers below 33 and during 34, and you can see we get a second leg up during 35. Bulls were hoping that this was a good enough bar to get follow through and that we would rally up to the 15 close, since bulls who bought the close of 15 did a reasonable thing buying a pair of bull bars. Although it wasn't amazing to do, it's definitely reasonable to buy the close of 15. So it makes sense that we would have to get back to that close. Just want to check something. Yeah, you can see if you bought, I suppose you could have used 32, but if you bought the close of 15 and you were trading literally just always in, you could buy again above. So if you bought the close of 15, you bought more above 32, your exit price was basically right around break even right here, right where we started finding a lot of selling. And there was also the low of 19. So there was a lot of resistance here in reality. But yeah, but so you can see 35 never triggers, which is disappointing for bulls on 36. And probably buyers below 36, probably sellers above. 38, bad follow through on 37, so buyers below. 38, where again, bulls are trying to get a breakout up, but in reality, it's looking like it's just going to be a weak channel. So not really sure what's going to happen here. If it's okay to be long. I was long, and I exited below 42. I thought 42 might clearly flip the always in, and it was a strong enough bar that it can definitely get follow through sometimes. So it just makes sense to get out below. If you get a good bull bar closing near its high on 43, you can buy again. And how valid is your premise really with 32? You're at your break-even price 10 bars later, and you're getting a strong bear bar closing near its low. That is not what you had envisioned for this trade if you were buying above 32. So really, probably not the best area to be long. So exit below 42. You can see 43 bad follow through, 44 bad follow through, but 44 did something interesting and tested all the way, basically down to the middle of the tight trading range. Potential final flag from 24 to 31. And so when you get that big of a tail, it tells you that there was obviously a lot of selling. And so I don't think buying above 44 is smart at all. I'd rather wait. I thought we might pull back and form, another higher low and maybe another reversal up. And you get bad follow through on 45. So I'm confusing my thoughts right now. So I'll just start with, you get bad follow through on 45. Anyone buying above 44 sees 45, disappointed, exits during break even, at break even during 46. And then you get that big strong bear bar. I thought we might get a pullback and then a higher low reversal because this was the first attempt above the moving average. But when you see 46, you know that any bulls who are long for any reason are probably by here, pretty concerned. And with these big tails, if they didn't get stopped out anywhere, which you'd have to have a pretty wide stop to not get stopped out, but assuming they didn't, they'd be extremely concerned. And then you get bad follow through on 45. And then 46 is basically the final straw for the bulls. Bulls are giving up below 46. It's a wedge. It's a strong bear bar closing near its low. It's a reasonable short at the moving average. And not to mention, this could be a big leg one pullback, leg two day with how things have traded so far. So not surprising that you get follow through on 47 and 48. Reasonable to sell the close, reasonable to sell the close, reasonable to sell the close, reasonable to sell the close. So these are all okay sell the close bars. We get a strong breakout below 25. When you break out below 25, the main question is, are we going to get back to the 25 low? So our bulls who bought below 25, scale in 5 points lower, are going to be able to make money. And you can see they were able to make money during 53. So 53 is a big strong bull bar, and it pulls back enough to let traders out. And there was a concerning thing that 53 did, where if you bought on a stop above 52, you were able to make about 5 points. You were one tick away. The high of this is 43.18.25, so it needed to get to 43.23.75, and it got one tick away. So a 21 tick trap, but it ran, these stops, measure move stops, and it got back to this low. So it's not as bearish as you want it to be. This, might be just a sell vacuum test rather than a strong spike. So 53 and 54 are reasons to be cautious. And 53 is big enough for a second leg, so it's kind of hard to want to stay long after 53, or sorry, stay short after 53, and then you get follow through on 54. Now there's a big tail on 53 and a tail on the bottom of 54, so it could be one pullback two and two legs up. But in general, probably going to be sideways into the close. And you can see we ended up getting a channel, essentially a channel here that so spike, pullback, channel, which is pretty common, right? Spike and channel, spike, pullback, channel. So spike and channel patterns are extremely common. And 55 is a low one short. So those bears who do exit here, they can sell again below 55, follow through on 56, 57, 58. 59 is a bull bar, but doesn't close above anything. No real reason to get out. 60, you can sell below 60. You should be concerned though at this point. It's potentially 1, 2, 3 sell climaxes. So you're potentially selling a third leg down. And you're selling towards the bottom of, a channel line. So it's kind of risky to sell below 60. And it's not surprising that we get bad follow through on 61. Anyone who sells below 60, you know that we're probably going to pull back. And you can see, even if you bought the close of 59, which is a terrible thing to do, it tried to let you out on 61. It didn't quite, but it tried to. 62, 63, some follow through for the bears. And essentially we get a double bottom on 66. I wouldn't buy above 66, but I would exit long or exit my shorts for sure. It's potentially going to flip to always in long with any sort of follow through here, but you're just not able to get to the follow through on 67. Another bull bar on 68, closing near its high, but again, not quite always in long. And then inside bar on 69, reasonable swing short, but it's late in the day. You get some follow through to the measured move target, and then another double bottom 74. Traders exit above 74 for this reason, because 75 happens sometimes. The same reason why traders exit above 66, because sometimes you're just going to get a big bar like 75 after 66. Yeah. So I already mentioned on the daily chart, I think we're going to bounce tomorrow morning, or just tomorrow in general. I think we're going to get a bull close tomorrow. On the weekly charts, bears are trying to get big follow through for their strong bar after an inside pattern. You can see the inside pattern on SPY. After the II pattern, bears are trying to get strong follow through here. I don't know if they'll get it. I think it's more likely that we bounce than it is that this becomes a big bear trend bar. Yeah, that's pretty much it. Tomorrow I will not be making a review for Wednesday. I probably will for Thursday and Friday, but I definitely will not be for next Monday. So no review, if anyone's listening at this point, but no review on Wednesday, September 27th, and no review on Monday, October 2nd. But I will try to make reviews for these 2 days. That is it.